seem to be faltering a little bit. Hopefully, the budget does the trick for bulls' perspective.
I don't think anything seems to be good for the markets this morning, right? And this is what's interesting, and both of you should come in. Till a few days ago, we've consistently maintained Trump is good for business. Markets were running up on hope that Trump gets elected as president. When Biden steps out, headlines this morning are Asian markets decline as Joe Biden steps out of the race. So I'm very confused of how the markets are perceiving or reading any of this information that's coming in from the US.
Frankly, Trump good for business is a viewpoint that some have. And from the Asian markets perspective, Trump was not necessarily the best thing, because his push in his first term has always been, make in America, cut out China, don't import as much. Biden took that forward to some extent, but Trump is very aggressive about it. So Trump coming in is bad news. You've already seen that rotation out of tech stocks, so perhaps that's one part of it. Right. And I don't know what Kamala, means for the market. And Kamala's also not a shoo-in. I mean, this is so much exciting stuff to unpack. Who finally becomes the Democrat nominee? It's most likely Kamala, but not necessarily it. So a lot of factors there, but just on the face of it, global cues are not positive. That's absolutely sure. This morning, the big numbers that have come over the weekend from the Indian markets and the Indian companies are not that positive, and nor are global cues. So on Friday, for example, US stocks retreated, the Dow tumbled over about 370 points, and that same theme has continued, where investors are rotating out of tech stocks and the whole AI semiconductor buzz as well. So you see the Nasdaq down over 1% in Friday's trade. Nevertheless, you are going to see also a focus on non-tech spaces as hopes of a rate cut improve. But of course, the big news now becomes Joe Biden out, Kamala in. U.S. bonds, let's look at what happened to the U.S. Treasury as well overnight as we go through it. They ticked higher ahead of a Fed meet at the end of the month. Remember, you've heard now from various Fed governors of many states, and all of them saying that we need to wait and watch and get more of a handle on the data. So the 10-year was at about 4.24%. One stock that I must mention is CrowdStrike. CrowdStrike is now infamous across the globe because of what happened on Friday. So this cybersecurity company, which is to blame essentially for the Microsoft outage, and the impact of that was being seen over the weekend. That stock tumbled about 11% down. So just a little side note over there. Let's look at what crude has been doing. It rebounded a bit. Crude was down about $2 over the weekend, but it's rebounded after the initial slump. The slump actually took place because of the hopes of a Gaza ceasefire. Anthony Blinken's talking about it, but till it doesn't happen, I don't think anyone's going to take it too seriously. Anyway, the Brent near about $83 per barrel. But look at Asia this morning, and Asia has opened weak. It's been hurting because of the slump following U.S. rotation out of stock. So Shanghai down 1%, Nikkei, Hang Seng, and a bit of that Trump fear as well. What is Trump going to do? Remember, it's all relative right now. It's not as if Trump is, the best bet for global markets or for global peace at this point. But let's get more of a perspective there.
I think there's been also a rate cut that came in from China. So the MLF has been reduced. So despite that, I don't think the Chinese markets seem excited or euphoric. I guess the fears that the recession there or the recovery there is still far out. So the MLF, which stands for medium-term lending facility, is at 2.5. So that's actually been reduced. Came out of nowhere. I don't think this was expected by the street. So
it wasn't, and Xi Jinping has said that they will do everything they can to help the battered sectors. So that's actually a really big piece of news from an economic perspective too, though not quite reacting the US market.
Especially in context that the rest of the world is considering rate hikes. No, actually, pardon me. I'm holding on to rates, largely because of a good-looking economy, right? China, I think, in that sense, is looking at a rate cut to boost the economy, which may potentially remain a problem. And that's actually bad news for crude and industrial metals on our street as well.
So they've been ahead of the curve. But I think what's overwhelming today on Asian markets is global factors. And like I said, Seth Freeman joining us to talk more about it. He's Managing Director at B. Riley Advisory Services. Seth, very good morning to you. Great to have you on NDTV Profit, and an interesting day with so much to unpack. back. Let's just talk about what the political upheaval or the big moves over the weekend mean for global markets. Biden bowing out was expected. It was expected to happen over the weekend. He's backed Kamala Harris. Do you see that going down smoothly or some uncertainty there? Because she still has to win the votes of all the Democrat delegates before she's actually the nominee, isn't it?
Yes, I need to begin by saying, you know, I've been with you for about 20 years, and I don't know that we've had a discussion that's really, intersected with politics like today's will.
Yeah.
So I do have to say that anything I say is my opinion and does not reflect, anyone else's opinion. And I should probably also let the audience know that I am a Democrat. So my view is going to be somewhat biased by that.
I am now even more excited to hear your answer, Seth. How are you feeling? Do you think Kamala is the best bet, and has the whole sequence of events over the last 48 hours made a Trump victory more probable?
More probable?
Or less?
I would say less probable. First of all, I should also say that, I'm here in California, in San Francisco. This is her home turf. She was a prosecutor, then a senator. I think it's going to be very tough. Just before getting ready for this hit today, I guess Trump announced he has no intention of being in a debate doing the debate that was scheduled for September. And I think a debate with Kamala Harris would be very interesting. She's highly trained, and I think it would just be really set the stage for a lot of excitement. But the market, as you said, I think baked in the Biden announcement, and we can see that because futures have not really moved much. The market's pretty flat today.
Seth, good evening to you. Now, while you're a Democrat, I would love to know an independent opinion of what the markets will have in store for them in the run-up. Because if the shooting incident made the markets believe that Trump was a shoo-in, and if you are saying that this throws the election wide open, what does it mean for equities? They may not have reacted overnight. What's next until November 4th?
A number of things. This is going to be will end up being, I think, a policy-driven election. And we're also going to have to wait and see who the vice president nominee is going to be, because I think that's also going to drive policy and give us a lot of guidance. There's a big difference in the Biden-Harris policy in terms of internationalism versus protectionism, nationalism. And we have seen a lot of new infrastructure investing over the last few years. And I would imagine that that's the same kind of thing we're going to see here under potentially a Harris or other Democrat president. But there's, it's very difficult as a matter of principle for many Americans to elect someone who has been convicted of 34 felonies and who has been found liable for sexual assault and who has been in the midst of taking away a lot of rights for women. And I think that there's going to be a lot of excitement in the Democratic side, and that independents who may have gone with Trump may be looking at
Seth, do you expect Kamala to sail through for the Democrat nominee? President Obama said we're in uncharted waters here. Could there be more contenders popping up, or is she a shoo-in right now, in your view?
We are a democracy, and there's opportunities for others to present themselves, and there's certainly money behind other candidates, possible candidates. But yes, I actually think that shoo-in may be a little strong, but I would be surprised if another nominee materializes.
Well, it is a history of sorts. Joe Biden entered politics as one of the youngest senators in American history, and of course he leaves as the oldest president. So, of course, it's a moment, Seth, and I think while we may not be able to relate to your emotion completely, it is significant because Biden has done so much good for the U.S. So it comes at a point when it's his health and not his policies that are leading him to step out. But just let's quickly change focus and talk about the other important trigger for the markets. 35% of the S&P 500 will report earnings this week from Tesla, Microsoft, and Google. Markets have had a fantastic run from the start of this year. Do you now feel like it's best off to take profits off the table? While politics could be one reason to give a bit of uncertainty to the markets, maybe it is just looking for a cue to take profits. Do you think it's best to get out and then come back in?
I don't know how much the market run-up really reflects politics. You know, we've had a pretty good economy. What the biggest difference is that we have so many technology stocks dominating the large cap side of the market, and some of those, like Nvidia, of course, have gone up like crazy. So I guess it depends on whether someone's a trader or a long-term investor, but I don't anticipate big market withdrawals based on the run-ups that we've had. I think we have to see how the Fed responds. We have a very impaired real estate market here in the U.S., and those symptoms are just coming out stronger and stronger, and real estate drives a big piece of our economy. So I think we have to look at what the Fed's going to do.
Thanks, Seth. It's going to be a very important week. I guess when you come back to work later today or Monday morning, it's going to be a reaction to Biden stepping down, 35% of the S&P reporting earnings, a potential ceasefire in Gaza, and U.S. GDP data that your markets will be eyeing. But thank you. Have a good weekend or whatever if it is left, and we'll see you soon.
Yeah.
Well,
thanks for having me.
Thank you. Guys, Biden has set in motion a historic process that could result in a woman becoming the most important person in the world, and that too of Indian origin. So one way or the other,
exactly,
we can take a little bit of the pride here.
We love to find the Indian connection. So whether Kamala comes in, or even if Trump comes in, his vice president's wife is Indian. So we will have
the small joys.
We have as close to power. But for the rest of the market, I mean, while we're all excited about this news, look at the implied open. And I think that's a bit of the story that you need to really look at right now. 129 points down. You're going to open weak. Asia contributes to it. U.S. markets contribute to it. And our results. Actually, that's the big problem, isn't it?
Yeah, I think it's
big numbers and big disappointment.
So it's just so difficult to see upsides with Reliance, HDFC Bank, Kotak Bank, JSW Steel, Wipro, all of them looking like having a wobble. So difficult to see upsides, and plus because of the fact that we spoke about it on Friday, right, that ahead of the budget, a lot of people who are longs might want to take some money off the table as well. Be careful. Why do you want to be a braveheart and go into the budget with a naked long? So, it was inevitable. It started happening on Friday, very likely continues today because of the results and otherwise as well. So if you're long indeed, just be careful with position sizing. And I think I want to tweak the third point a little bit. It's not just upstream, but I think the game in town is energy. And now look at what ONGC, etc. have done. And if indeed oil prices move, could there be a bit of a pullback there? But does that bring the OMCs into focus? Because if you think of the PSU setup, the only pocket where there is probably margin of safety right now is the oil marketing companies. And if hopefully there is a Gaza ceasefire and less loss of lives, and if it helps cool off oil prices, then the pocket to bet on is BPHP IOC. So therefore, that remains a pocket that you certainly want to keep an eye out for from a non-results perspective. By the way, the BPCL brokerage notes are very constructive on the stock after what they've delivered in Q1. A bit of a surprise. Let's see if there is more in store.
I feel like, Niraj, you're holding on to anything you can find right now. That's the only hope that you have.
Exactly.
Is OMCs may support the market.
No, just may support themselves.
Yeah, support themselves. That's a good one, though. Broader markets were very weak, and I think that was something that we all took away on the Friday's sell-off. Yeah. There was no sector that saw a cut of less than 2%. Mid-cap, small-cap, micro-cap index declined sharply, going home pretty much at the day's low point. While you had FIs buying, the sentiment was very muted. So I think that is muted or rather negative. Metals, in fact, I think that stood out for me on Friday as well. A 4% sell-off on metals even before China cuts rates. So I shudder to imagine what will happen to metal stocks as we go into trade today. So broader markets, profit booking was obvious. This morning we're going in with a weak start. Global cues are not supportive. Like we've said, earnings are not going to give us any support. So you've got a tough day of trades. Historically, in the last 10 days preceding the budget, 6 out of those 10 days, the markets have gone home with gains. Only 4 out of those 10 occasions, the day before the budget, the markets have gone home negative. But let's not forget that we're going into this budget with a 5% gain in 1 month. So more than likely today could be a nervous day on Day Street. Sectorally, everything's down and out. IT also is not going to rescue the street. The dollar is looking stronger, so that could be a sentimental positive in that sense for IT stocks. But earnings for Wipro came in. The ADR had got trashed on Friday itself on Wall Street. Numbers were in line with street expectations, but I think the bigger worry here is that if Wipro hasn't done as well or doesn't sound as sort of optimistic about the outlook as compared to its peers. So just to highlight those numbers for you, IT service revenue declined marginally. EBIT fell 0.4%. Margins were flat, up about 10 basis points to come in at 16.5 versus 16.4. Dollar revenue was down 1.2%. And the company has said that they expect revenue from IT services to be in the range of $2,600 to $26 million to $2,652 million. What differs is Wipro's growth differential with its peers remains, and so does its valuation. Large deal TC was seen, and BFSI growth was positive. However, despite large deals, TCV has declined 12%. Headcount has seen a decline. America and Europe continue to see muted performance. Management has said that they see no significant shift in demand environment, and discretionary spending still remains a challenge. So from the 4 IT stocks, Wipro seems to have been probably not as good as what the other 3 have posted, and it comes in on a morning when global cues and the markets are weak, so Wipro is going to take it to the chin. The stock will see a big sell-off in early hours of trade. Brokerages as well don't seem very enthused with what they've seen on Wipro. Let's quickly move on from Wipro to Reliance Industries. Now, this is again interesting because we've had so many brokerages that have come out on Reliance Industries. We'll highlight for you the numbers, and I guess there are so many pieces to RIL that you'll have to just quickly go slowly. Revenues were down 1.9% to come in at 2.36 lakh crores. Net profit was down 18% at 21 to 43 crores. The other parameters are operating profit was also down. Operating margins were down 120 bips. All in all, the quarter was a weak one for Reliance Industries. This is, remember, the 5th straight quarter that brokerages don't seem enthused by what Reliance Industries has done in terms of performance. The business that seems to be struggling is oil to chemicals, or O2C, more popularly known. The decline in margins for refining and chemicals was more than expected. Lower fuel cracks, tepid global demand, new refineries have impacted Reliance's core oil to chemicals business. Geo Infocom has done okay, and that's been the biggest contributor in terms of Reliance's performance. But let's not forget that, and this is what I think Jeffries has pointed out, the fact that so while the increase in prices will impact the September quarter earnings, the fact that they've left the lowest end of the segment unchanged, brokerages believe that they're trying to acquire the lowest end of the pyramid in terms of market share, which may not impact the numbers too well going ahead. Some argue that the retail business has shown some strength, footfalls have increased, and that's what the management has said. But then on the other side, they've also shut down quite a few of their Reliance outlets. So that, of course, is a glass half full, half empty, depends on how you want to look at it. So all in all, while growth was driven by increased footfall and expansion of store footprint and streamlining of operations, the fact remains that the numbers aren't meeting street expectation and brokerages aren't impressed. The other big one, and I think we will dwell on this in a lot more detail, is HDFC Bank. Numbers largely in line. NIMs have improved slightly. Brokerages on this one are very excited, still remain constructive. I shouldn't say excited, still remain constructive, largely because they believe it's a work in progress and the business will get better. And the management commentary, for a change, lends some hope.
Yeah, just that one small bit on HDFC Bank. Again, ahead of the results, the quantum of short build-up on HDFC Bank was very high. If you just look at from the first, sorry, just a bit of pain. But if you look at it from the 1st of July, HDFC Bank, massive short positions added. In fact, the OI is at 1 year highs of, I think, 3.4 billion actually. And the 1610 strikes saw some massive call addition. So if the stock starts off significantly lower today, never know, some bit of short covering might come in. Because they would want to take the profits off.
While you say July started off not too great in that sense, June, the biggest contributor to Bank Nifty was HDFC Bank.
So if you go back to that,
it started cooling off. And I think it makes sense, right? Because the rally has been so sick. It's been slow and steady, but it's been a good play. But yeah, maybe some short covering, and that would be good for Bank Nifty. Because
we saw with the Asian Paints, because it was massive shorts. Let's see if it happens to HDFC Bank.
Interestingly, on Friday, Asian Paints was one of the few gainers, only few gainers on a day when the markets as a whole were weak. But if HDFC do see some short covering, it will do really well for Bank Nifty, because I think that's what's struggling or could potentially be struggling in morning trade.
Yeah. Just to add one bit on RIL, and of course, Samina went through it in detail, but I found this Citi take quite interesting, and it puts it together in perspective, where it says that the problem is that there are misses in 3 of its 4 key business segments in Q1. So O2C decline continues. The retail weakness is particularly disappointing, says Citi. And the geo-tariff hike will only help them in Q2. The retail bit, at least, because that's where the big push has been. I mean, this is a conglomerate which has been trying to balance it out and hedge its bets in the sense, and not just completely dependent on O2C. Yeah. The other 2 bets are not really working this quarter.
And especially with Geo as well. The thing is, while they've gone out, they've had a significant subscriber base. Yeah. But the fact that, and I remember this, but they're the only ones in the price hike left out the Jio Bharat, which is the lowest end of the spectrum, right? Indicating that they will acquire significant market share, but it's a lower end of the spectrum, so it may not be as profitable.
Yeah, your ARPUs are not working. So yeah, Reliance, and if Reliance and HDFC is in pain, then you're going to have a painful day.
And Wipro, add that to the list.
Yeah, in terms of weightage, yeah, Wipro, of course. But if Reliance, HDFC, the big ones are in pain, you're definitely going to have a painful day. All right, very quickly, JSW Steel, the news doesn't get much better, to be honest. Numbers are weak, but in line. So on expected lines. Revenue was up 1.7%, EBITDA down 21.8%, EBITDA margins down fair bit, about 390 bips, and net profit down 64.3%. That could be in part due to this inventory write-back of 2,195 crores. I'll just quickly take you through what brokerages are saying, because it puts it together well. Nuvama maintains a hold at a 914 target, says that the EBITDA is down 10% Q-on-Q, but that is in line. Indian operation EBITDA contracted 8% on lower volumes, and they await lower entry points to re-enter the stock. So Nuvama is a bit negative also because of the valuations or the run-up in the stock. Citi, meanwhile, has a target price of 650 rupees on JSW Steel. They've maintained a sell, and they see a 26% downside. Performance of the U.S. operations is worrying for this company. It's worsened sequentially as well, and management has indicated India spreads should improve despite soft steel prices. You'll hear from the management on the channel as well, so you'll get more details there. But nevertheless, metals already had a fairly bad Friday. Don't expect too much better from JSW Steel today. Indian Hotels is the other one that we'll quickly talk about. Disappointing Q1. It's also a traditionally weaker quarter for the space, but headwinds have included elections, extreme heat wave, fewer wedding dates. So all of that added up has not been great news. Fundamentally, though, the company and the management does say that your supply-demand mismatch continues in the space where, there's just not enough hotel rooms for the kind of demand you're seeing. So Q2 might improve stronger than Q1. They're hoping for a recovery in foreign tourist arrivals from October, so that would be interesting. Revenues up 5.7%, though, in this quarter are lesser than what was expected. So Indian hotels might also take a knock. Tejas Networks, on the other hand, might be, sort of a joker in the pack on a day which is otherwise looking quite weak. Their business with BSNL really is looking like a turnaround story. The part of the Tata stable. Now, revenues up 730% to 1,562 crores. EBITDA has come to 230 crores versus loss of 46 crores. EBITDA margins at 14.7%, and they've gone from a loss of 26.29 crores, this is year on year, to a net profit of 77.48 crores. So two big deals that have worked for Tejas Networks, and this really might be, I would say, one positive story that you could see today.
Yeah. Well, I'll start with a negative on Kotak Bank because it didn't look too bad, and we'll talk about it in detail in just moments from now. But sharp decline in margins versus stability, at least in margins for HDFC Bank. So that was the first one. Struggle on deposits, CASA at a low of 43%. Not the best of news. I must tell you, though, viewers, that you might see brokerages upping their targets on Kotak Bank, but a lot of that is a result of rolling forward of estimates to FY26 or thereabouts. So bear that in mind. Very likely the stock will have a negative reaction today. So that's the first one. JSW Energy, even though the results were a bit mixed, but I think the operational metrics stood out and the capacity addition stood out. So what they did, revenues were down 1.7%, but operating profit margins at 49.2 versus 38.7%, excuse me. And profit after tax up 84% at 534 versus 290 crores. So very strong numbers there. And brokerages by and large have been upbeat. So Jeffrey's note on JSW Energy, they have maintained a buy. The target price has been revised to 840 from 690. Predominantly, they are saying that aside of the fact that they'll deliver 25% EBITDA CAGR and 32% EPS CAGR, they are on track to achieve the FY25 expected 9.2 gigawatt capacity. So do watch out for JSW Energy in the session today. And the one that's very strong numbers, but still fell slightly short of what the guidance might have been, is transformers and rectifiers. Look at those numbers.
It fell short of expectations.
On the con call, the management has said that, we wanted to deliver X, but we've been able to deliver
expectations.
Yeah, we want, but because of some supply chain issues, which is I was saying, it's a bit tricky, simply because if you look at the reported numbers, even relative to Bloomberg estimates, it's blowout numbers. 107% uptick in revenues, 322 versus estimates of 187. EBITDA margin 13.1 versus 2.8. PAT 20.8 versus loss of 12.2. Now, the reason why this becomes a bit interesting is simply because QOQ, TRIL in delivery has seen a sharp downtick. And that was because of lack of supply of raw materials to be able to deliver on the number of transformers that they wanted to. Can that change in Q2 remains to be seen. Will the street be happy with this delivery, or will they look at the quarter-on-quarter drop is the question that sadly I don't have an answer to, but watch out for this one.
Just to add to that, the stock itself is up 700% in the last one. It's up nearly 180% year to date, and they are, with the expansion plans that they've got lined up for the next 3 to 5 years, this is going to be India's largest transformer manufacturer and one of the few which will have control on its raw materials. They've also aggressively invested in backward integration, which makes it, which justifies the sort of returns this one has pulled out. Just quickly, I know we need to move on to editor's cut, is while transformers stood out, PVR Inox, huge disappointment on those earnings. Smaller company, but revenues were down 8%, EBITDA was down hugely. Margins have also declined 600 bips, so the stock will be under pressure in early trade. So that's the other one I want to add. Well, the list is extensive from Kotak to Yes Bank to JK Cement to Union Bank, but I think these are a few.
Just a couple I'll quickly mention, and no surprises on PVR. They've not even had any big blockbusters, so that's
Kalki didn't do much, huh?
Tough business. Maybe it would not show this quarter. Okay, Paytm I'm quickly going to talk about because the numbers were bad as expected. This is the quarter which shows the full extent of regulatory action by the RBI, but not as bad as it could have been. And interestingly, Bernstein has come out with a note where it's maintained an outperform on Paytm. It looks at a target price of 600 rupees. That's an upside of 31% because of the management call. And the management coming out and saying that we hope to deliver at least one profitable quarter. The worst could be over is what analysts are saying about the stock, even though they expect a 55% decline in loan disbursements. And they've come back to the core business. So a lot of focus on UPI, etc. Nevertheless, Bernstein is saying that they expect PAT profitability by Q4 of FY26. I found that interesting. Nippon Life AMC is the other one I'll quickly talk about. Total income up 35%, net profit up 41%. This is one space that has relatively been doing okay, and you could see that continue. So these two also that we could talk about. But I mean, the list could go on. We should focus on the big story on financials.
Just before we get there, two numbers and two very important numbers. One of them is Oberoi Realty. Amidst all this thing of real estate companies being mixed, very strong performance, 54% uptick in revenues, operating margins expand, PAT up 82%. And one stock which is not as expensive, so Transformers and Rectifiers is an expensive stock, Tejas is an expensive stock. Shakti Pumps, if they deliver on their FY25 numbers, is not expensive as much, and look at what they delivered in Q1. So they've started off with a bang. Sales up 5x, 567 crores. EBITDA margins expand meaningfully, as a result of which, look at their PAT number. 93 crores versus 1 crore YOI. Boy, this stock will fly today as well. So, just a lot of them. So ICICI Lombard has had an uptick too. But yeah, Nippon Life, very strong performance.
I just mentioned Nippon Life,
So lots of things.
And also Navkar Corporation. I think Stallion has gone and picked up about just over 1% stake in a bulk deal on Friday. So lots and lots of stocks. We will of course highlight all of those with the analysts as we go along and gear for trade. But the focus remains this morning on tech, Reliance and banks, and I'm going to toss it to you on that note.
Yeah, thanks. Thanks. Actually, let's get in Harsh, because financials is such an important part. And Harsh, what stood out of the two biggies that came out with the results?
Well, Niraj, first off, with regard to HDFC, it's all about margins. The game is margins and EPS. And EPS growth will largely be driven by margin improvement. Now, margins sequentially went up by just 3 basis points, which is 0.03%. So, very, very thin increase. What's happening though is, or what HDFC really needs to do is they need to replace their high cost borrowing with lower cost deposits.
That's it.
That's all that needs to be done. Easier said than done in a tough deposit growth environment. So from 8%, which was their borrowing number prior to merger, it's gone up above the 20% mark. It's coming off sharply at 2% a quarter at the moment. So 60,000 crore of debt is what they've repaid. But it's just not fast enough because the margin recovery is still taking some time. And that's what the key concern is to start off. Otherwise, it looks like an inline set. Growth, of course, a concern, but what they are suggesting is that the priority is going to be profitability. And therefore, they will have to continue to focus on deposit growth rather than advances growth and shrink the LDR.
A bank which is saying we're not focusing on growth but on profitability.
So, I believe that it's going to be a tough time for 12 to 18 months. That's what most analysts also seem to suggest. Because once their loan to deposit ratio starts to shrink below the 100% mark, mind you, there's no mandatory RBI regulation which states a requirement for loan to deposit. But nonetheless, the loan to deposit being elevated is a concern from a liquidity perspective. And once that shrinks, my sense is they'd shift back to growth fairly quickly. But just the weight is on the margins and the shrink on the LDR. Once that happens, my guess is that the stock likely should re-rate fairly quickly. So that's going to be the inflection point.
What about Kotak?
Well, for Kotak as well, the margin shrink was large, and therefore that's likely the concern. Now, of course, 26 basis point shrink is an anomaly because there were certain one-offs as well in Q4 FY24, and therefore the shrink is 20 basis point, but that's still fairly large. What's happening? Probably 2-3 factors affecting margins. First is just with regard to unsecured, they've not been able to grow unsecured as well as they have in the past. They've slowed down a bit on the unsecured side, which is what is likely leading to a little bit of pressure on margins. That's one piece. So where are they growing? They're growing home loans. which is lower yielding. And that also impacts margins. So it's those couple of plays which are coming through. Plus deposit growth was flat, which means that your cost of deposits ideally ought to go up because they'll try to pull in deposits. The loan to deposit ratio is at 87% now, which is slightly on the elevated side of things. So one would watch out for deposit growth in coming quarters. Of course, the numbers overall again in line, despite this large margin shrink, to be able to maintain the numbers in line is decently commendable. And despite the RBI embargo, the growth is also decently commendable. But just the large shrink in margins is a concern, and the deposit growth number not going up is a concern. And therefore, can we expect a further margin shrink? Likely. And that will keep the street guessing, and that will probably keep the stock under pressure as well.
So, there is a problem. Harsh, thanks for being a part of this conversation and giving us that lowdown. And before we take that break, viewers, won't take too much time because we'll get this view on all of this from Sandeep Agarwal. No, but just a second. No, but just a second. The point that I wanted to make is this, that if you look at the 6-month performance of all of these biggies, which is HDFC Bank, Reliance, Wipro, and Kotak Bank, and in fact Kotak Bank since May beginning. You look at that table and look at the kind of gains that these stocks have made since May. There has been a fair degree of uptick in all of these, and all of these have had a chink or two in their armor in terms of the quarter one reportage. So very likely that they put pressure on the index today as well, and therefore the index which starts off lower might stay lower, unless of course there's some bit of short covering that HDFC Bank sees in the session today. So that's something you want to keep an eye out for. But else it seems very difficult for the market to really have a catalyst in the very short term, considering that the budget is tomorrow and people might want to stay light.
Yeah, let's get in a view from Sandeep. Sandeep Agarwal, fund manager and co-founder at Sowilo Investment with us. Sandeep, very good morning to you. All right, let's talk about the big three that we've honed in on. RIL, Wipro and HDFC Bank, the three big movers. Let's start with an RIL. Sort of mixed views from a lot of houses this morning on whether it's still a top pick in its space. Citi thinks 3 of the 4 verticals have not really performed. What is your take on RIL, and are you looking at, maybe this heavyweight really pulling down the index today?
So, good morning and thanks for having me on the show. First of all, on the fundamental side of the results, if you see the O2C business has seen some weakness, there is some pressure from the gasoline side. And also, retail has not done so well as was anticipated. So I think these two things have led to some, I would say, inline or kind of, lower side of the expectation in numbers. And even, the ARPU on the Jio side has been flat. So all in all, if you see the results, while there is no big negative surprise, but there is nothing also to cheer about it. And whatever benefit you will get on the ARPU front is forward looking. It will start from this quarter because the hikes have happened at the fag end of the quarter. So I think, from that perspective, this is not a number where people will rush to buy. But yes, the new energy commentary, if you hear a lot of positives there, 5,000 acre complex for the module is almost ready to start production. 9.1 gigawatt is the capacity, the subsidies, all those things, it is a futuristic business. The new energy is doing well. And I think, while you may not see a big uptick, but at the same time, I don't see a very big downside also. This large heavyweight index stocks can go up 5% or down 5% on good or bad numbers. I don't see much more than that. But I think from a longer term perspective, you have a traditional piece which is doing, cash cow, and the new businesses are flourishing well. So I think it is going to be a very good story for next 5-7 years. We take long-term calls, so I think it is a good story from that perspective.
Yeah, I understand. And I think, Sandeep, it's also Samina joining in. While I get your point that you've got to make investments for the long term, and that's the only way to create significant wealth. So RIL is on your buy list. Just to quickly reiterate that, after what we've seen on the earnings, Sandeep, yes or no answer?
I will still wait because, we want a better entry point. So we will still, but we are monitoring it very closely. We are monitoring, in fact, all the, both the private banks also the HDFC and the Kotak, and we want better entry points. But I think, we are very close to them looking attractive now, because I think there is a peak of pessimism in the private banks, and both things cannot happen, that economy grows and these banks don't do well, because they are quasi proxy. What has happened is last 1.5 to 2 years, the equity risk premium, the perceived equity risk premium in the market has gone down massively in the retail investors' mind. And because of that, lot of money, a good portion of money which used to go to the deposits, have also been diverted, I think, into the equities. And because of that, the deposit growth is also weak. And also, these private banks don't have much access in the remote areas where still deposits are the key saving instrument. And I think both the things together have come up and are hurting the deposit growth. And if deposit growth is not there, obviously you will have to choose between growth and margins. And obviously it is better for banks to choose for margin and wait for growth. And that is what is happening in both the banks also.
Sandeep, let's quickly change gears and move from Reliance Industries to the tech space. Wipro announced numbers on Friday. With that, the Fab 4 IT companies have declared their earnings. So while TCS, Infosys and HCL Tech managed to beat street expectations, from the look of it, Wipro has disappointed the street. Which IT company are you buying post the first quarter earnings?
So let me put it this way, this business is a B2B business. And if you see last 3 decades of track record, it is leadership driven business. 30-40 clients decide your growth and your future. And after 2007, I think except for a few quarters when, they have done well, Wipro has been lagging and going through tough time from this top leadership perspective. They had made few changes, outsider, insider, everything they have tried, and it has not yet worked. And I will say that same thing that, till they get their leadership right from at least the top management and some portion of the senior middle management, the growth and other things will take time. I think this company is now a cash generating company kind of stock to play, where buyback and other kind of supports keep coming in. But from the growth, it is always lagging. So I don't believe that Wipro should be seen from a perspective of the sector. It doesn't truly represent the sector currently. I think more closely Infosys, TCS should be seen as representing the sector. But having said so, remember this is a mature sector, so we will buy value picks. I run a PMS and my clients hold some of the stock, so I will not be able to explicitly talk about one stock what I would like to buy. But we like stocks in the large cap names which are reasonably priced and where there are possibilities of turnaround. In the expensive mid cap IT services, we don't like anything. And in the ER&D space, it is a structured story of 10-15 years, so we have to buy it expensive. That is the way I would put.
Sandeep, in terms of now that we have enough visibility on how IT companies are doing, how would you rank TCS, Infosys, Wipro and HCL Tech? And which would be your top buy?
So I think HCL Tech tick marks both growth and potential growth and also the valuation side. So I think it should be the top choice, and then followed by obviously, Infy, TCS, and last choice would be Wipro. Although Wipro significantly scores better on valuation, but at the same time, it is really, really lagging on terms of growth. So that is the way we look at. But we also, would like Tech Mahindra because, there is a leadership change. The telecom has almost bottomed out. So there is a big uptick which can happen primarily led by margin improvement. I see margin improvement, in fact, in the whole sector. And that's the reason I believe that, this is the beginning of upgrade cycle of earnings. So EPS will continuously be upgraded for next 3-4 quarters, and that will lead to substantial returns in the sector. By substantial return, I mean 15-20% in such a year where, last 2 years have been phenomenally good for the index. So in this year, if you get 15-20% safely in some names, it is a great return in my view.
Right. Sandeep, very quickly from the banking names that reported earnings, HDFC Bank, Yes Bank and Kotak. What are your key takeaways? Are you buying any of these 3 banks? And also amongst the PSU pack, the outperformance on earnings is phenomenal. We saw Bank of Maharashtra, we saw Union Bank this morning as well. So very quickly, your take on the 3 big banking reportings.
So I think, HDFC and Kotak will not give you immediate return. You will have to, invest and wait. And that is the right way to, make money in long term. Because they are going through some challenges on the deposit front. They have to choose between growth and margins. And currently, there is a lot of confusion what to choose. Every quarter sends some different signs. But I believe at this price, you can go wrong on time correction side, but you cannot go wrong on the price front. So, long-term investor can start looking at these names. We are looking at these names both. As far as PSU banks are concerned, remember, they have access to the remote areas where, people still prefer bank deposit over other asset classes, and that's the reason they are benefiting, and private banks are struggling. So it is the whole story of banking sector today boils down to deposit growth, because that is required for profitable growth, and that is lagging in the private banks, and it is doing okay in the PSU. So PSU will still have some run till the equation meets.
So HDFC Bank this morning is a buy or complete hold or a sell? One quick call, Sandeep.
From a long-term investor perspective, people should look at, it is very difficult to give trading call because we are more into fundamental side, we manage assets. So I will not be able to give a trading call, but I think, these are good businesses and they will do phenomenally well if you look at from 3 to 5 year perspective.
Okay, thank you.
Numbers are not good.
Okay, so long-term business and long-term call is positive. Thank you so much, Sandeep. Thank you so much, Sandeep, for joining us this morning. Quick break. Agam Vakil joins on the other side to give you the F&O setup. A day ahead of the big event. Don't miss it. We're right back.
Welcome back. This is India Market Open. We're taking stock of the futures and options space at the moment. Let's see how things have panned out. Friday wasn't really such a great day, and even though the Nifty made a new life high, it eventually actually closed in the red. Now, there are some concerns coming through, and among those concerns are valuations potentially also taking some profits off the table before the big event of the union budget. And because of that, we saw a lot of long unwinding. In fact, 6% decline in open interest as far as the July futures go. The Bank Nifty also came out by around 0.7% with a near 6% decline in open interest in the July futures. So unwinding in both these key indices. As we move into this week, how are we looking at positioning? Well, very clearly, a lot of writing around the 25,000 mark. We were within kissing distance of that, but we didn't really hit 25,000 when it comes to the Nifty. And consequently, we actually started seeing a lot more writing around that level as well. On the lower end, there's a relatively weaker was support level around 24,500 and 24,600. But as we move on, let's also talk about stocks. It was a day where the broader markets did see a considerable amount of weakness. The market breadth was not favorable, and on account of that, we saw shorts in Eicher Motors, REC, Metropolis, Cummins India, along with Syngene International. Even among stocks, we saw unwinding, saw short, a little bit more short covering, but we had weakness in Apollo Tyres, which gave out another 4.5%, and Dalmia Bharat, which was also under pressure by as much as 5%. All in all, not a great day of trade. The question really is that, well, can we expect a continuation of selling in today's day of trade as well? That's a wait and watch, but we're going to keep an eye on those factors, and naturally Reliance Industries and HDFC, two of the heaviest weight companies, and the kind of implications that they may have on both the Nifty as well as the Bank Nifty today.
Right. Thanks for that, Agam. That's, of course, a quick update on the F&O setup this morning. The street does look nervous, especially after the big sell-off that we saw on Friday in trade. Broader markets also witnessing weakness. Metals led the way down, and this morning implied Nifty is down 100 points.
Samina, I wonder what you made of the comment from the SEBI chair that, hey, the F&O volumes are not just impacting wallets, but it's beyond investing.
Yeah. I wonder what that meant, though. I mean, I'm just trying to figure this out in my head. And while we get that this has a huge impact on young investors, and remember, of the significant chunk of people who've come into the market, I believe, in the last 5 years, are in the age bracket of 20 to 40. So we understand that, but having repercussions beyond investors and traders is something that makes me wonder, what is it that Madhvi Puri Bhuj is referring to?
So if we know that, I mean, maybe, this is one guess, that we saw this, we spoke about this about 4 months ago, about this US-based fund making $1 billion out of Indian derivative markets. And usually it is said, right, that retail loses the money in derivative trades, or insti gains. So is it that a lot of household savings are coming in to fund the losses of derivative trades that young investors are incurring? And is that therefore an issue that it's not just the trading income, but actually household savings going into option trades?
And also deposits. This could also be a problem for our banking system at home. Remember, a lot of investments that would go in as fixed deposits up until recently have now been gradually moving towards equity markets. We, of course, think that that may not be such a big problem, but the banks clearly are struggling in terms of pulling in deposits. And I think a lot of the management of a bunch of banks has actually indicated that. So it's worth noting it is a concern. And remember, India is one of the largest derivative markets in the world. So this statement again means, and Madhvi Puri Bhuj has stuck her neck out and maintained this for the last couple of months now. So this is really not coming out of nowhere or without any context. But let's quickly move on to the markets now. Soni Patnaik of JM Financial Services and Kush Bora both join in. And Chakri Lokpriya as well of Red Strawberry. Good morning, guys. Thank you very much for joining us on this very rainy Monday morning in Mumbai. Soni, I'll start with you. It's looking tough for D Street this morning. 24,200 is an important level of support, but I think the worry is that while global cues are negative, we're going into the budget tomorrow, so there are those jitters. Earnings are a bit of a disappointment. The breadth of the market was weak over the last couple of days before the weekend, and more importantly, the broader markets are now showing signs of weakness. Do you feel like there's an opportunity to go short on the Nifty in early trade?
And good morning, everyone. Thank you for having me on the show. So I think on expected lines, one can see that, Nifty, Bank Nifty, they were due for a good correction. It's a healthy correction to be considered. And ahead of the event that is tomorrow, it is expected that people would book out their positions and stay light on the indices as well as on stock fronts. On those lines, the markets can see some sort of a profit booking. Of course, on Friday closing, it was indicating that, there were some shorts getting built because, the long positions were actually getting unwinded from the positions from the week-on-week basis we can see. So I think Nifty is very crucial. It is holding a support as of now, but if today's gap down indicates that it can break below the support of 24,400, that is going to be a crucial level to watch out for. Of course, below that, one can go short in Nifty towards 24,200, 24,150. So that will be the level one can go short till. One can book the profits on those levels. Just just wait a while and see if it bounces back from that support. Because if it doesn't and break that support, you can see further downside towards 24,000 as well. A bank Nifty, on the other hand, is something that is indicating a short from current levels. I know it is still consolidating between 52,000 to 53,000 on closing basis. It is holding that support of 52,000 on a closing basis. However, preempting that bank Nifty is about to break that support, you can see it heading lower towards 51,500, 51,000 levels. I think bank Nifty is something that may drag the indices lower on today's market.
So, Kush, because we have paucity of time, Kush, I'm going to ask you for a specific view and not an index view, but because Reliance is such a big draw per se, and it might start off lower today, we'll take in Chakri's view on Reliance, of course, post the break. But if Reliance starts off lower, Kush, what's the trade out there?
Morning, Niraj. I'll hold up any kind of fresh buying until the levels of 3,000. That's where a massive support comes in for Reliance. Just wait and see if 3,000 is indeed held for a session or two. Perhaps we'll put off any fresh buying for post-budget post-budget sessions. So I'll wait up for a day, perhaps even tomorrow. 3,000 is the level that I'm watching for. If that is held, then from a near-term perspective also, Reliance does become a good buy.
Okay, we need to slip into a break. Stay on, all of you. Stock Ideas left, conversation with Chakri Lokpriya left, but we need to slip into a break. Back with more in just moments from now.
Welcome back. You're watching India Market Open. Just about 2 minutes or left to go for the pre-open rates to hit. And I think by now it's clear we're going to have a tough day. Nifty implied open shows about 100 points down. Soni Patnaik, Kush Bora and Chakri Lokpriya with us this morning. Let me start with Chakri. Chakri, do you think that the whole sort of quote-unquote disappointment about the big numbers that we've seen over the weekend is a little bit overdone, and also coming at a time when the markets have run up significantly? Fundamentally, do you think in RIL, Wipro, HDFC Bank have truly turned out lemons this quarter, or is it below expectations?
Morning. In terms of addressing each one of them, if Reliance was cyclically low, still its petrochemicals and its oil refining business are at cyclical businesses, and both were down about 14%. And lower margins in the refining as well as lower cracks in the petchem business. On the other hand, the retail business held up fairly well, and the telecom business also added the subscribers. So in an economy which is going to turn up, both local, domestically and worldwide, so cyclically, Reliance numbers will look stronger going into next year. And it's also not an expensive stock. Second, Wipro has again missed estimates, and I think it's partly a company's internal plus external environment, down about, so their guidance of -1 to +1 is kind of, the stock will kind of hold. It's already trading at about 17, 18 times. And HDFC Bank's clearly, its cost of funds and its loan deposit ratios, all those things are a company-specific issue. So in all these three cases, one is a cyclical, second is company-specific Wipro, and third is also company-specific HDFC Bank. So which means the Nifty is not actually overheated from a multiple valuation perspective, and it's about 17, 18 times.
All right. So let me just get picks very quickly since we're just about 15 seconds from pre-open. Soni Patnaik, let's start with you. Top picks this morning.
So both would be on the sell side. One would be a sell in SBI Card, where we've seen a sell below 730 on Friday's closing. So that's a support that was broken. It's also broken 10, 20, 50 EMA altogether. So one can sell in futures in SBI Card for a target of 700 to 690, keeping a stop loss of 730, 732 can be a stop loss in futures. The second idea is also a sell. It's in Cipla futures to be sold at current levels in futures, and keeping a stop loss of 1510, a target of 1460, 1450 can be seen.
Yeah. Well, that's the word coming in on trades. Kush, good morning. Samina, what are you feeling about the markets this morning? What are your top? Okay, let's go into trades. I guess the index is looking weak and we're all on the same page with regard to that. But anything that you're trading this morning, any brave heart trades, long or short?
Hi, Samina. Good morning. I mean, all on the same page on the direction. The magnitude perhaps, could differ. But then two trades, one on the long side, I'm still venturing a long trade. Although let me put this caveat out that, don't go and buy this right away. Give it time to settle. So that is India Glycols. We've seen quite a bit of jump in the, volumes. If you see for the last 5 to 10 sessions, pardon the pun, but, looks like something's brewing. Given the market condition, it's not held on to the highs of the day. But then, as I said, definitely a good uptick in the volumes, and the price trend also on the rise. So 1060, 1110 are the targets to look at. 960 is the stop loss. As I said, don't go out and buy immediately. Let things settle first. In the last couple of sessions, the short calls have started to pay well. So all short calls that we discussed: Tata Steel, Ramco Cement, Jindal Steel, all of them have done rather well. In continuation with that, Tata Chemicals, weakish structure for a while now, breaking below the 200-day moving average. I think this is one stock that could head further down from a near-term perspective. 1020, 1000 other targets. 1060 is where you place the stop loss.
Sell calls coming in. Chakri, you want to come in on IT? Of the four IT, the Fab 4 have reported numbers. Which IT company are you buying after the first quarter earnings, if you are buying?
IT as a sector, we're still not buying. There was a trade of about a 10-odd%, and I think half of that trade is kind of played out. So amongst, if you still need to buy, then probably Infosys and stay away from Wipro.
Chakri is still not buying, and must say Wipro is a dead giveaway of the mood in IT this morning. A 10% lower. It'll change, of course. I mean, but by the way, it may not also. 6.5 lower, but suffice to say Wipro will start off lower, possibly stay lower. And the most disappointing of the four that have come out with results thus far, at least in the large cap space, 5 rather, that have come out with the results in the large cap space. So quite something really. Soni Patnaik, if IT starts off lower today, which looks very likely, if you were long, would you take off the longs or would you stay long here? Any of the large 5 names?
Niraj, I think it's wise to take off the longs because we've seen IT in a good momentum this series, but that race, that momentum, that upside has been quite a lot for IT, and markets also quite overheated. The index itself in IT is quite overheated. It's just wise to take off the longs and wait for the data to stabilize to see which level one can re-enter. It could be Wipro, it could be TCS, it could be Infosys. All these large cap stocks, they've moved quite a lot. There could be some momentum in mid cap IT, but for large cap, it's certainly a profit booking take.
So, TCS is in the green, and that looks very interesting this morning. But quickly pull up RIL, HDFC Bank, Kotak, Yes Bank if we can. Let's see what's happening to them on pre-open. 3% off on Reliance Industries this morning. HDFC Bank, interestingly, is flat. Kotak is flat as well. So banks are not doing as badly as you'd have imagined. Maybe this comes back to what Niraj indicated, that there was a lot of shorts in the system on HDFC Bank. So today could be a morning of profit taking. Yes Bank is up in about 5% in pre-open trades. So that one looks good. Along with them, we'll have the transformers and rectifiers, the Nippons, the JK Cements of the world. But Kush, let's get specific. On Bank Nifty, what is the trade, if there is one this morning?
So interestingly, Samina, 51,800 as a support zone has been respected for a while. There's a possibility, that we might slip below that today. I would actually like a contra trade, but as I said, I'll wait for things to settle. And, my confidence is coming only from the fact that, the PCR is approaching oversold territories of, I think, 0.76 for the current expiry. And, tomorrow we've got the budget and the expiry. So there might be some pullback. So while I won't go short, because I think a lot of, the downward momentum or the gains to be had on the short will perhaps be taken out in the, opening itself, I will look for contra trade. That's not to say that I'm super constructive on Bank Nifty just yet. It's just from a technical standpoint that if 51,800, 51,600 zones are perhaps respected, then we could see a dead cat bounce back towards, the levels of 52,200, 52,300 where we are at the moment.
On that's HDFC Bank, iBank trading flat as we see it. Chakri, you want to come in on banks? Would you be looking to buy HDFC Bank? It's been on the sell side for the most part of July. Numbers are largely in line. It's a work in progress bank. Brokerages still maintaining their positive calls on HDFC Bank. If we do get weakness today, tactically, would you acquire HDFC Bank at the current market price?
Use the right phrase, Samina, which is HDFC Bank as a work in progress. And, their cost of funds, their loan deposit ratios, and that adjustment will take quite some time. It'll take at least another few quarters. So meanwhile, the CASA ratios still have to improve. That the spread between the loan growth and the deposits have to improve. All have shown kind of some improvement, but again, it's a work in progress. Trades at 2.3 times, so not really much to go for in HDFC Bank.
Okay. Well, so some mid-size names which have come out with good numbers. And just before I go to Mahima for that key brokerage note, just want to mark. So remember, viewers, transformers and rectifiers might be iffy because they've come in lower than what they had said. And that's why I think the stock is down. Also because it's an expensive stock. Supreme Petchem, good numbers, margins expand. Wonder if the stock is reacting duly. Now 6 minutes are past. So Supreme Pet will come up on your scheme. No, not really. And Shakti Pumps, I'll be really surprised if that one is down. Even if the market is lower, Shakti Pumps should have a good reaction, and rightfully so, because very strong performance by Shakti Pumps in the session, so in the quarter. So this is one that you want to certainly watch out for. And you want to watch out for ITC. Is that going to be one key stock from the large cap end to watch out for? Because Macquarie has rated ITC outperform, set the target price higher. That's our key brokerage call for the day. Mahima Johnson with details. Mahima, good morning.
Good morning, Niraj. So Macquarie has rated ITC outperform with a target price of 535, which is an upside of 13% from its Friday's closing price. Now, what they're seeing is that they're seeing an EBITDA growth of 35 to 40% over the next 10 years, which is at present around 20%. They're saying that pickup in cigarette segment will not impact the diversification in non-cigarette business, and they're seeing a lot of tailwinds in the FMCG and hotel business, which will offset the weakness weakness in the paper business. They're also seeing strong brand affinity and multiple margin levers to manage the leaf tobacco inflation. And what they're saying is that 11% EPS CAGR over FY25 to 27 estimates will be driven by the non-cigarette segment. Lastly, they're also seeing valuation of 45 times PE for 1 year in FMCG business and 20 times PE for the cigarette business. So this is the overall view of what the note says on ITC.
It's a very constructive note on ITC. The stock is going to be one you want to watch out for and trade this morning. Sony, two stocks, Asian Paints and ITC, both were those lone gainers on Friday. This morning, you've got a constructive note on ITC. So, but on the charts, would both those stocks look good for a long trade, maybe intraday?
Definitely. I think ITC intraday still holds quite a lot of chance and it can head higher towards 500 odd levels. Anywhere between 490 to 500 can still be seen in ITC. Just hold the stock and trail the stop loss to 445, which is a good support as of now. This is after a long time ITC has come to this level from where it used to fail multiple times and not give the breakout. It's not going to be the case this time. You can see a lot of long built positions getting added to ITC and there's aggressive buy flows also. So I think just hold the stock for a 500 target.
Right, 500 target on ITC. The stock is indicated to see a marginally higher start. A quick check on Asian Paints as well. While we're at it, the stock was doing okay in trade on Friday, despite weak earnings coming in on Thursday. A whole bunch of other smaller companies, not smaller, but of course out of the Nifty 50 that companies have reported earnings. So Shakti Pumps, Transformers and Rectifiers, like Niraj has indicated, the stock is seeing a gap down in early trade is what we are getting. But also Chakri, going into the budget, interestingly, railway and fertilizer stocks that were looking very weak for the last couple of days are seeing looking to get the day started on a very strong note. Would you have any sort of a tactical budget trade this morning that you could recommend viewers to buy and maybe hold for the next couple of weeks or months post-budget?
Going into the budget, I think the best thing is to stay on the sidelines because, both what they need to balance, and tomorrow we will know the answer, is whether the capex is still at about 14-18% growth that the government maintains in the budget. And if that holds, and then, railways, budget, defense, etc., fertilizers is a brand new story. We need to see what they'll do. It's slightly also trickier because, given the subsidies play an important element. So given that, companies like RCF, Chambal Fertilizers have run up from their lows, I still wait and watch for tomorrow.
Metals, Kush, any trade on metals? 5% lower on Friday on the metal index. This morning, would you consider a short position on any of those metal stocks?
So they've taken quite a beating already, and some of these are now closer to support zones. So the ones that we mentioned already, Tata Steel, Jindal Steel, some of these names, I think we continue to hold shorts. If you've got any, but I wouldn't recommend fresh shorting just yet because, as I said, a lot of steam has already been taken out of these. So we'll wait and watch. If existing shorts are there as a position, you should continue to hold.
Sony, just in the bank space, in the larger BFSI pack, is there anything that you would look at today for a momentary trade? Look at a Yes Bank, for example, not doing too badly, all things considered. Are any of these players there on your radar, or you would stay away from the whole financials space right now on the charts?
I think I would prefer to just stay away. I am preempting the Bank Nifty overall index to break the support, which would be led by some of the heavyweight names, such as HDFC Bank, Axis Bank. They look a bit weak. They are about to break the support. So it's just wise to stay away. One stock that may hold on to its support would be ICICI Bank, which has been holding on to the support even, when we're seeing the last week. So I think as long as the stock is still holding above 1200, 1220 support level, the stock may consolidate now, or not that it's giving out breakout, but definitely this is one stock which is showing better strength in comparison to the rest of its peers.
Kush, what do you make of an Oberoi Realty? Good numbers and relatively doing okay in the pre-open session this morning. Is it poised for a breakout?
Not really. I think the entire realty pack came into a bit of a selling pressure last week, perhaps 15 days. Overall Realty 2 participated in that. It's broken some of the key support zones, the 50 and the 20 DMA. So I think I'll be a little watchful. Perhaps closer to support zones, which is 1620, 1640 kind of levels, is where it'll probably be slightly more attractive. But given the market setup and the fact that the stock's been trending lower for the last month or so, I think I'll just wait this one out.
Okay, wait this one out. So all we've got across the board from all our three speakers today is wait this one out. Let me now ask you constructively, what do our viewers do? Those who are watching, are they going to now just take this very rainy Monday off before the budget? Kush, why don't you start with one, clear call, either on the buy or the sell side?
On the sell side, I think continue a short on metals. That will be the one call for the day.
Sony, just very quickly on the oil and gas pack, it was showing us some strength, and with lower crude prices, OMCs could be beneficiaries. Would you consider trading a BPCL and HPCL IOC?
I think these stocks have shown some breakdown as of Friday's closing, especially IOC, which is given a breakdown below 10, 20, 50 EMA on closing basis on Friday, that too, with a negative divergence in MACD. So there are a lot of negative parameters on technical charts, which is indicating the stock can head lower towards 162, 160 on a positional basis. So this is a good sell from current levels, keeping a stop loss of 175 and a target of 160.
Sony, just one question, 30 seconds. Your one clear top call for the day today.
I think I would stick to the sell side, and most likely it will be on the index. Bank Nifty sell futures at current level, keep a stop loss of 53,000 and a target of 51,000. To hedge it also, one can buy 53,000 24th July series. So I'm going short on Bank Nifty index.
Okay, here's the cost benefit or the risk reward seems evenly placed right now, but the trend might be in favor of the banks going down. I must say though, the heavyweights have started off marginally in the green. So you want to watch out for HDFC Bank in particular and see if there is some short covering today, because a lot of shorts in the system for HDFC Bank individually. But here come the first trades this Monday morning, penultimate day of the budget, 0.5% lower for the Nifty 50. Not surprising at all. The Bank Nifty should come up on your screen and see if that one is reacting. 0.5% lower for that one too. Mid caps and small caps should be a crack. About 0.7% for the mid caps, small caps too should be lower. Yes, indeed. Get the heat map up on the screen, more red than green. Just about few names. HDFC Bank, surprise, or maybe not, is the top gainer. Likely that the street likes the fact that the NIM numbers seem a lot better than what was anticipated, and maybe the shorts in the system might help the stock stay afloat. ITC, Nestle, Infi, HUL, Britannia, clear bent towards the defensives. On the flip side, Wipro 7% lower, big newsmaker. Kotak, Reliance, JSW Steel lower, big newsmakers, and then the others follow. Everything from an auto to an IT name are all down. But yes, while Wipro is the big newsmaker, don't take your eyes off the big boy Reliance Industries. Gets a negative reaction to its results, with Macquarie calling it a material miss Q1, though Nomura cites it as a top idea, and Kotak Bank being 3% lower. A lot of red, very little green, Tamanna.
Yeah, absolutely. And I think Wipro really getting the bashing. Ultratech there has climbed to the top of the charts on the back of its numbers, which on the face of it weren't that great, but then relatively perhaps looking better as the top gainer right now at about 1%. Let's look at specific stocks. We already know that the broader markets are starting out weak, and a lot of the play is about results and responding to results. So PVR, Inox, let's begin with what's happening there. Even as your red on the mid-cap 150 is deepening, your small-cap stocks also deepening. But let's look at PVR, Inox, poor numbers, 1% down. They have a positive brokerage note from UBS of all, really saying that it is a buy at these levels, but 1.5% down on a PVR this morning. Transformers and rectifiers numbers were good on the face of it, but below the guidance of the management itself. Down 5%, really hurting despite very good numbers. Dixon Tech was showing some signs of life in the pre-open session, now is completely in the red, about 1.5%, nearly 2% down. Oberoi Realty had a good set of Q1 numbers, and you're seeing at least some movement there, up about 4% in trade. Let's look at Rosari Biotech, also good numbers, and they're completely flat, actually 0.5% down. Very difficult to find, positive moves in that sense in the market today when the overall breadth and mood is negative. Let's look at Supreme Petrochem as well, since it's all about the numbers. Revenues were up 28% and PAT was blowout, 76% up. Has not made a difference, 3% down. I mean, this is a tough crowd. This market today is a tough crowd and punishing companies more than anything else, as the mood has gotten quite negative ahead of the budget. I reckon, Samina, among all other things, even the reiteration time and again from regulators that they're worried about options trading is going to also have a bit of a dampening effect on market sentiment.
I think, Tamanna, today is only earnings, budget jitters and weak global cues. So it's a perfect cocktail. If you were sitting short on this market on Friday, you'd actually be quite excited this morning. Just take you through all the earnings reaction. Union Bank, good earnings. Very quickly pull up the stock. Let's see what it's getting up to. In the broader market space, Union Bank still reacting negatively despite good earnings. Tejas Network reported numbers, so pull up that one. RPG Life, Indian Hotels. Tejas is down 7% on back of numbers that have disappointed the street. RPG Life has impressed the street. The stock is up 8% in trade. Indian Hotels trades the slight positive bias, trading in the green. Nippon Life, AMC and ICICI Lombard. If we can pull both those counters up, we'll get a sense of what's happening. Nippon is up 1.5%. ICICI Lombard trading with a marginal downtick. MTN is also seeing a big gain this morning, up 5%. Route Mobile, that should be a stock on the radar. They reported that's MTNL off the day's high point, but still looking good with a 3.5% gain. Route Mobile down 5% as we see it. Credit Access Grameen reported earnings on the weekend. Markets reacting to that this morning, giving it a thumbs down. The stock sees a 5% downtick. Patanjali, if we can pull that one up, reported numbers. The numbers were interesting actually. They saw a big jump in profitability, but the stock is seeing a 2% downtick in trade. JSW Energy, JK Cement, RBL Bank, Yes Bank are some of the other ones that you want to watch. JK Cement is trading flat. You've got RBL Bank, that's up 2%. Just Dial is trading with a 2% gain too. And you've got JK Cement, if I can pull that one up with the 2%, and Just Dial is up 2%. Anant Raj, if we can pull that stock up, we should have it over on the screen in a minute. There is a little bit of a news flow on that one. The subsidiary Anant Raj Cloud has entered into an MOU with Google LLC to collaborate on providing data center infrastructure. So on back of that, Anant Raj is seeing a 5% uptick. Pull up EMS if we can. They've managed to get an MOU as well on a pretty big order, but the stock is trading flat to slightly lower. Everything in the defense pack, from BDL to HAL to BEL to Cochin Shipyard, Mazgaon Docks, are all seeing a negative opening this morning. Canfin Homes will be talking to us shortly, post their earnings. The stock is seeing a 2.5% to 3% cut. Apart from that, Raymond is seeing some weakness. You've got Titagar, so contrary to pre-open trade, railway stocks are down and out. Raymond is seeing also another day of weakness. Tire companies are looking weak. There's very little green on the screen. The few gainers include the likes of an MTNL, Tata MTNL, Oberoi Realty, Emami, Yes Bank, Just Dial, Dr. Lal, Path Labs, post earning, JK Cement. But the breadth is weak, and I think that's what's a little scary this morning. I think while the market is not going into the budget euphoric, I think it's going into the budget very, very cautious. But anything that you're picking up on, Kush, early ticks, looks weak. Anything that you'd go short or long on intraday?
Well, UPL seems to have broken below the 200-day moving average. So I think that's one stock that you can consider short, even from, let's say, an intraday perspective. 525 to about 510 is the zone that the stock could head to. And on the upside, you want to keep a strict stop loss at 550, where the support zone was, now becomes a resistance. So UPL is a short. As you said, barely any green on the screen right now. But if I have to really pick a Serra Sanitary, where after this huge fall is seeing some support and attempting a rebound. So from a trade perspective, 8600 is a stop loss. On the upside, 9000 and 9250 could be the targets. So just a couple of names, that are there in the green. Terra Sanitaryware sort of stands out with the support at 8,600.
Tata Tele doing well this morning, 4.5% up after their numbers, which weren't actually too great. But anyway, Tata Tele seeing a bounce back. Just Dial has continuously been performing relatively well and also up today. So these are some of those stories which are working. Chakri, but I want to talk to you a bit about the kind of defensive play we're seeing in ITC, Nestle, etc. have been doing okay. I think one clear bet ahead of the budget is that there is going to be a push for consumption. Would you buy into that theory right now?
I would still stay away from the sidelines, because I think what we see is happening is all the companies which are kind of underperforming, there is some amount of rotation into them. Their valuations are okay. It's not that HUL is cheap or ITC is cheap. They probably have about 10% upside if you hold on long enough for the next 6 or 8 months or so. But outside of that, there's no. So I'll still stay away from FMCG.
Okay. So we'd stay away from FMCG right now. We'd stay away from IT for the most part. For a Wipro, which is getting completely bashed this morning, Kush, do you think that there is at some point an opportunity to accumulate, or completely stay away once again, down 7% now?
Rarely ever believe Wipro has an opportunity, to buy it despite the kind of run that it's seen. On the pecking order, it comes very low. So for me, Wipro is a very clear avoid, even when the IT sector is doing well. I think there are plenty of other names to, go out, buy, invest, trade in. So Wipro's not really on the radar.
What are those names then?
Again, KPIT, Persistent, HCL Tech. These are the three names that, we've constantly sort of had a track on, had a few buy calls on. So we'll maintain this. Any kind of crack in, let's say, a KPIT towards 1750, which is a support zone, and also the 50-day moving average somewhere thereabout, I will consider that as a buying opportunity. So three names, if I have to look out for, then it's HCL Tech, Persistent, and KPIT.
The VIX as well has jumped significantly this morning. It's up 5% again, and it's been on an upward trajectory for the last 4-5 days. The India VIX. If you can just quickly pull that up. So you are going into this big event tomorrow, very, very uncertain and unsure at this stage. So guess it was buy the rumor, sell the news. That's probably playing out, but nervousness obvious. But Niraj, you wanted to take
just one small mention. So metals per se were looking wobbly. I think Vedanta, by virtue of the quantum, the nature of the investors who put in money in that QIP is actually in the green. Remember, unlike the floor price of 461, because they upsized the issue, the actual price came in at 440. So no wonder the stock came off along with other metal names. But today, finding some support there. Soni Patnaik, any thoughts on Vedanta individually?
I think, of course, the entire sector is quite in a good pressure on this downside. We can see Vedanta as of now is holding on to its 50 EMA support. So if it breaks that level of the support, it can see further downside. I think 430 is very crucial to play for. Any break below 430, it can test 410, 400 levels. One can just be a bit watchful of the 430 as a support. From current levels, 460, very strong resistance. Fresh upside should only be considered once it's above the resistance of 460.
Soni, we talked about FMCG stocks like the likes of an ITC and an Asian Paints a minute ago. But, that's the only green on the street. And if there is a trader who's probably not too convinced to go short, do you feel like even an Asian Paints at this stage may not be too bad, because they're off the day's low point, interestingly, despite the fact that there's no positive news flow here?
Yes, I mean, I think the sector is a defensive sector. It will try to perform when the markets are quite choppy. And if we talk about Asian Paints, it is trying to bounce from its 50 EMA today. And if it manages to hold on to 2,900 for the day, closes above 2,940, the stock can see upside towards 3,000, 3,040 levels. One can just continue to hold. The risk reward is indeed quite favorable at current levels. In any case, just hold with a support stop loss of 2,900. It can bounce towards 3,000, 3,040.
What about Vodafone Idea? It's been on the sell for a few weeks now. At 15.5, would you play for a pullback on Vodafone Idea? Kush, that was for you.
No, I wouldn't. The 50-day moving average is where the stock is exactly, right now 1560, 1550. Any break below this will drag it close to 1450 kind of levels. Haven't really been constructive on Vodafone for a while. I think, that view maintains rather. There hasn't been much to suggest that, we could perhaps consider and contra trade and buy Vodafone Idea. So I'll stay out of this one. If anyone's got a short position, continue riding it. 17 is where you place your stop loss. Perhaps 1450 and 1350 are the targets that you should look at.
Indian Hotels is not doing too badly this morning, 2% on back of its earnings. Chakri, you want to comment on Indian Hotels?
The quarter gone by was kind of weak, for various reasons of elections, etc. But I think, going into a seasonally very strong quarter going in this fall, I think their MICE business would pick up and so would their F&B business. So that way, the valuations are okay. So I would buy Indian Hotels.
You would buy Indian Hotels. What about Nippon Life and ICICI Lombard? Those were also very strong reportings from both of them. Any preference here? Would you be looking at buying Nippon Life or ICICI Lombard?
I think in this quarter, the underwriting losses kind of improved. But this has become a game of, whether the losses can improve or not, whether they don't have really the pricing strength. And given that backdrop, I'd stay away from that.
That's a stay away. JK Cement is also trading well, 2.5% gain post its earnings. Realtel is up 2.5%. Cera Sanitary Ware is not doing too badly. So I think fertilizer is one pack that's actually holding off quite well. RCF is also up 2.5%. REC is up 2% as well. Castor, actually, why don't we go into those? Sony, Seat, JK Tires, actually tire companies as a pack. Any trades here at all? They've again had that price hike, reported numbers. At least JK, I know, was attempting a breakout, but it's been stalled again on back of weak reporting from Seat last week.
I think all three stocks, they have a similar formation on charts. They're trying to bounce from their support around 50 EMA. Not very decisive bounce. One can play around, from current levels. Of course, for JK Tires, 430, good support. If it breaks, you can see further downside towards 395, 390. I think that's the level, but not a lot of upside from current levels. Hardly 452, 455 can be seen as the upside. So maybe these stocks have sort of formed on a sell on rise, and once they reach these levels, you can see again profit booking or selling pressure coming in. So I think it's just best to avoid this sector for now.
Okay. That is one interesting point as well. Remember, I think Kush was talking about what to buy in IT, and some of the ER&D names came into focus. Chakri Lokpriya, I'm tempted to ask you, because I heard you say that you're not buying IT right now. Banking is skittish with the issues that are cropping up time and again. We know autos are on a weak footing right now. What will serve as a catalyst for the market if some of these heavyweight sectors are out of the way?
These heavyweight sectors have actually been a drag on the market for more than a year now. HDFC Bank has not contributed to Nifty's earnings growth. Reliance, same story. So the entire IT pack, again, the same story. So the whole expectation is, so amongst this pack, I think probably IT, if come September, interest rates begin to be cut in the US. That BFSI comes back very fast in the US, giving out contracts to the Indian IT companies. So if that happens, then IT would be a front runner amongst all these various index constituents.
All right. So, let's take a look at what's been going on, and what I find interesting is how PSEs, the Nifty PSE, which has been languishing the last few sessions, is back in action. And REC 2% up, BPCL, HPCL, NHPC, LIC, all of them in the green, even an NTPC, even as we've seen a bit of hammering on these stocks for the last few days. So the PSEs are back. Even the Nifty is seeing some bout of recovery over here, I must say, even, in some terms at least. Chakri, can we really rule out a budget play? My sense is that once you have the announcements coming in tomorrow, you might see a turn in mood. How could people really position themselves at this point? What would be the safest bet?
The safest bet would be to stick with the leaders if they have to really play for a trade. Now, for instance, REC is up today. I think, REC, come what may, and Power Finance, all the power financiers, they will have to, they're on a strong wicket. Their NIMs are strong, unlike the other BFSI sectors. And for various reasons, because the sector is growing. So the companies like that is what I would pick. Like, for example, the battery companies, there are only two of them. You would need that with all the green transitions. Exide and Amaraja. So that's the way to place, because otherwise it's getting a bit tricky. What will be the emphasis of the budget?
Right. Well, it is going to be a tricky day. Today is going to be also a little unsure on the street. But thank you, Kush. Thank you, Soni. And thank you, Chakri, for joining us this morning. The markets are trading with a negative bias, but trying to find their feet and trying to, of course, maintain and respect those important levels of support on the index. FMCG is the only green. The rest of the markets are trading weaker. The broader markets are declining too. And sectorally, most sectors are trading with a very clear downward bias. We'll take a quick break. We'll come back. We'll talk to Saurabh Gupta of Dixon Technologies to talk to us about what his expectations are for the much anticipated union budget tomorrow.
welcome back. You're watching India Market Open. We are just a day away from the big event, and in our budget focus programming, we've been speaking to stakeholders who are viewing the announcements made tomorrow very, very closely. One of them, of course, is Saurabh Gupta, CFO at Dixon Technologies. Saurabh, great to have you on the show. And we've spoken briefly earlier about how key it is to continue the policy push on Make in India, the PLI schemes. And of course, Dixon has been a rising star because of the PLI schemes and taking it on. Just want to get a sense from you on what are you expecting to see from the budget. I'm not saying what you want to see, what you expect to see. Do you see at this point more push on such PLI schemes, and what would you hope to see as well?
So thanks for having me. So I'll first answer your question, what I expect, and then of course I'll also tell you our wish list as well. So one thing which we really expect is that if you look at the whole domestic manufacturing for electronics, where there has been a lot of policy initiatives and the government policy framework has been very, very supportive. So the first level of domestic manufacturing ecosystem has been robustly built in India. But if the India needs to go to the next level, then it has to increase the level of the domestic value addition, which can only happen through incentivization of the component ecosystem. So we expect that the government should announce something on the creation of a component ecosystem, especially on critical components which go into the mobile phones, because presently the mobile phone, the value addition is presently hovering between 15 to 18%. With some kind of incentivization for components like for mechanicals, display assemblies, camera modules, battery packs, chargers, and vibrators and all, which are critical components of mobile phone. Clearly, that level of value addition can go to almost 38 odd percent. So that is something which we really expect, and there have been a lot of media articles to that effect lately. Secondly, in the interim budget, there was no talk about keeping that rebated income tax of 15%, which was earlier announced. So we would hope that 15% tax for manufacturing companies comes back. That will really bring down the operational cost and also encourage more investments in the sector. Third, we feel that the peak rate of taxes on some of the inputs and the key raw materials, especially on the sub-assemblies, should come down from 20 to 15%. Then there should be further reduction of that duty on input parts from 2.5% to 0%, because that will only, one, align India with the global value chains. And also it will bring us in line with what the simplified duty structures are in China and in Vietnam. So these are the three things that I would really hope the government should come about. And of course, in addition to that, the budget provisions can be towards allocating more infrastructure like industrial parks for electronic manufacturing clusters for promoting electronic manufacturing, something on R&D to create more innovation, to encourage more innovation in the electronic sector, and also some skill development programs to enhance that whole overall talent pool in the electronic sector, which is aimed at improving the productivity and overall skill set of the employees. So this is something that we expect and we would want the government to really think about.
Right. Saurabh, you've pretty much very explicitly put down your wish list, and I don't think there is more that we might seek in that piece. But I think your company aspires to hit exports to about $100 billion is what I'd read. What do you think? And export is a very significant part of India's growth story, the China plus one that we've been betting on. Do you expect the government to provide an impetus to boost exports? Do you also think that is the need of the hour as we see it?
Yeah, so definitely all the measures to encourage local production, creation of a component ecosystem, and also to encourage exports. So the numbers that you mentioned are slightly wrong. But yeah, clearly last year we had 1,200 crores kind of worth of exports. This year we are looking for that number to grow by 60 to 70% this year. But overall, if you look at electronic exports in India, has grown to almost $24 billion, out of which mobile constitutes almost $15 billion. And this number can really multiply in future years. So of course, the measures of creation of a component ecosystem will bring that competitiveness for the Indian industry to compete globally. So that would really have a positive impact on India exporting for the global markets.
Just to go back to the PLI schemes and what it's meant really for Dixon. Can you give us a little more detail on the various categories and how that has really, the benefits have come in? So a breakup, for example, if you can share on mobile, lighting, durables, etc. Because I'm just trying to get a sense that the policy push on the space doesn't change. But then what does it mean for you as a company and, of course, by extension, the larger space?
Yeah, so clearly we are the largest beneficiary of PLIs. One on the mobile side, where we are in the 4th year right now. And then one on the IT hardware, we are in the 1st year. Then one on the telecom side, where we have a JV and we are manufacturing those telecom and networking products. And 2 on the component side, one on lighting components and one on the AC component. So clearly we are a very big beneficiary and we have already started production in some of the PLIs. We are in the 2nd year. So PLI is definitely a big game changer for our industry. It helps in creation of a scale, generate that operating leverage for us, helps invest in component ecosystem, and also helps us becoming competitive as far as the global markets are concerned. So continuity of policy, maybe allocation of more budgets to PLI, and also the PLIs which are about to end for next financial year, government should give some kind of a roadmap for their extension.
If I was hoping to get a specific quantified number from you, Saurabh, on PLI benefits, for example, in the mobile vertical. Can you give us a sense of what has already come in or how much has come in?
Yeah, so we have already received our checks till September 2023. The last half of this, of H2 of the last financial year, that is still getting appraised by the government and the agencies. So my sense is, in our scheme of things, a large part of those PLI benefits are also shared with the principal customers. I'm not in a position to share any specific number, but definitely it helps us get that extra business. It helps us definitely become more competitive to invest. The whatever PLI money we are receiving, we can use that money to invest in component ecosystem. So it really helps us reduce our costs and make us more competitive, both for the domestic markets as well as for the global markets.
Okay. Thank you so much, Saurabh, for speaking with us. And of course, we will be hearing from Dixon after the budget as well. So it'll be interesting to see what really comes out and how that pushes forward for Dixon Technologies and the PLI schemes overall. So that was Saurabh Gupta, the CFO of Dixon Technologies. Let's shift our focus to JSW Steel now, which came out with its Q1 numbers on Friday. My colleague Harsh spoke to the Managing Director and CEO, Jayant Acharya, and began by asking about the quarter gone by. Listen in.
I think just let me reflect a little bit about what's happening around us. From an India perspective, I think we see a very strong economic momentum. We have just seen IMF also upgrade the economic growth to 7%, RBI at 7.2%. But in general, directionally, we are going very well on the back of a very good FY24 as well. This is reflecting in a very strong steel demand in India. In the last Q1, we saw a 14.9% improvement in steel demand YOY, which is a very strong demand, in spite of headwinds on account of the elections as well as the heat wave, which disrupted some parts of the country. We expect a strong momentum on the steel demand to continue in this year, and we would probably expect to be in the range of 148 to 150 million tons of steel demand by the end of this year, in the full annual year. In the Q1, we had some plant shutdowns in our production facilities at Dolvi and the East Works at BPSL. They have now resumed. So there was a marginal drop in production. However, on the sales side, we have done well. We have improved our sales YOY console on 7%. Indian operations improved by 8%, and it was the highest Q1 sales at Indian operations so far, driven by a very strong sales in the domestic market, a lower export ratio, about 10%, 90% was in the domestic market, which grew YOY by 14%. We had a good as in line with the expectation, coking coal cost fell by about $23 last quarter. And we look forward to another about $23 to $28 falling in quarter two as well. Iron ore prices have started softening, so that would play into quarter two costs and will support margins. There is one thing I just want to clarify, that in this 9,000 rupees per ton, which you see console, and about 9,200 per ton on Indian operations, there are some one-offs which are there in this quarter, including the inventory reevaluation. So that is about close to 2,000 rupees per ton. So on an operating level, we were actually 2,000 rupees per ton or higher.
Understood. Okay. So thank you for that. That kind of captures a lot of the picture, but let's dive deeper. So 11,000 currently in terms of EBITDA per ton. Your journey towards 14 to 15,000 rupees per ton in terms of EBITDA. How quickly can you make it, and how do you intend to do that?
So I would, the existing operations from our current facilities is now doing well. In July, September, we expect the volumes to, come back to a utilization level of 90 to 93%. So we'll see a substantial volume increase post the shutdowns which have been completed. Our new facilities at Vijayanagar, 5 million ton facility, which is partly commissioned and partly under commissioning, will ramp up now from end of Q2 and into Q3. Our facilities at BPSL, most of the facilities are commissioned, and the oxygen plant is expected to be commissioned this month. So we will see ramp up from BPSL also from this quarter going into quarter 3 and quarter 4. So second half of this year, we'll see a large ramp up on account of new capacities. That will increase our volume going forward. We remain stable on the guidance which we have given both for production and for sales for this year. As regards the EBITDA per ton, I don't think we have guided at 14 to 15,000 rupees per ton. In the past, we have been in the range of about $140, $145 per ton. In the last few quarters, we see that there have been pressures in the market because of higher surplus steel coming out of China getting exported, which has impacted the world prices at large, especially in the month of June. And that has been one pain point. We, unfortunately, because India has a very high level of demand compared to the rest of the world, we are vulnerable to this kind of a trade diversion at predatory prices. It is important for the country to take trade measures quickly, and we are in touch with the government to take up these matters. So we expect that the cost will support the margin going into quarter 2, because the cost will go down from quarter 1 to quarter 2.
Understood. Yes. So take your point with regard to costs. Talk to us about value as well. So you've spoken about volume and how that growth is obviously going to aid your efficiency. How is value playing out for you? How is pricing playing out in the market now?
So from a value perspective, if you see, we have declared that we have done value-added and special products in the last quarter of 64%, as against 61, 62%, which we have been doing in the last few quarters. We are improving our product mix in the, let's say, downstream and special product business, which is more value accretive to the overall business. That's how, in spite of a softer price environment in the last quarter,
back. ICICI Lombard in focus. The insurance player reported a strong Q1 with a 49% jump in profits. My colleague Harsh Saita caught up with the management to decode their Q1 earnings. Listen in.
I think if you look at it from a market standpoint, the industry has been kind of generally growing at anywhere between about 14 to 15%. Again, if you look at across various periods. But more importantly, I think if you look at the overall industry bottom line in terms of the combined ratios, that is still elevated. As in for the last year ended exit, the industry for FY24 had a combined ratio of 112. This, of course, is better than a 116 number which was there for FY23. So hence, in that context, I think if you look at directionally, I think the movement of the industry combined ratio seems to be on a positive trajectory. And that is where ICICI Lombard kind of gains a lot of support from, given the fact that whenever we see the underlying combined ratio for the market play out positively, we do see pockets of opportunities for us to be able to kind of disproportionately outgrow the market. And it is in that context, when you look at it for this quarter, I think against an industry growth of roughly at about 13% or thereabout, our growth was closer to about 20%. So we had a significant outperformance relative to the market. And this has kind of largely played through across the key lines of preferred segments for us. And in that context, when I have to speak for how the pricing environment is playing out, I think let's take the case of health, for example. I think, and within health, if I were to look at the employer-employee or let's say the corporate health space, now that's a segment which historically has been obviously elevated in terms of the combined ratios for the market. And hence to that extent, the pricing discipline has not been great. But over the last, I would say clearly the last 12 to 24 months, I think the pricing environment has clearly seen a positive change, as in to say that things have improved in terms of pricing. And hence, as I said, for ICICI Lombard, it's a great opportunity. And that's again the reason why relative to the industry growth of what we had seen in that segment, I think ICICI Lombard has had a significant outperformance at a price at which we are kind of comfortable with. So hence to that extent, I think that pricing environment for that segment seems to be playing out quite well. If you look at on the retail health side, I think again, very recently from an ICICI Lombard standpoint, we launched a health insurance solutions, Elevate, which kind of largely keeps in mind the customer requirements in terms of both the coverages as well as at the price at which it is kind of made available at. I think we believe, the book that we are positioned at on the retail health broadly should take us to a loss ratio of anywhere closer to about 70% or thereabouts. So hence to that extent, I think the pricing regime that is playing out on retail health for ICICI Lombard seems to be largely okay. On motor, I think again, as I said, while the industry combined ratios has improved, I think given the fact that there is an improvement in the combined, and hence to that extent for ICICI Lombard, we have been able to kind of see an improvement in the growth numbers. On commercial lines, that's the last segment that I will talk about in the context of pricing. That's a segment which has seen slightly a bit of a challenge in terms of the pricing environment play out in the market. And that's the reason, relative to the other segments where we had an outperformance, on commercial lines, our growth has largely been in line with the industry growth. And that's exactly the thought process that ICICI Lombard has historically been exhibiting, as in to say that whenever there are pricing challenges, then at that point of time, we take a slightly calibrated approach.